Hey guys, what's good? I'm Andre and today I want to walk you guys through the process of choosing stocks, how exactly you can go about buying stocks and making sure that you're always going to be successful, as well as obviously figuring out what are some of the potential traps that you can walk into. Before we jump in guys, I'm going to plant one tree for every 20 likes this video gets within the first week here. Help me out and we're going to help the planet out as well. And obviously subscribe if you enjoy the content. So let's jump into Webull guys, and I'm going to walk you through what basically is going to be a plan of action for us to swing trade successfully and make sure that we're gonna be successful through the whole of next year. Cool guys, so the key to successful trading is consistency. You need to make sure that you check two boxes. The first one is gonna be making sure that you win more often than you lose, so basically the rate of winning. And the second one is gonna be making sure that whenever you win more than when you lose. So again, we're talking about swing trading here, or trading in general. We're not talking about investments where you can just opt to do your due diligence on a stock, identify a really great stock for the long term and put your money in it. And guys, honestly, there are so many good stocks out there, so many great ways for you to average into a stock as time goes by. Start at $1,000 and just put in $100 every single month. Actually, I will link below here a website where you can just simulate what would have happened if you go back 5, 7, 10 years and invest $100 a month and sort of see where you could be and see the fact that within 10 years you can really reach amounts like $150, $180, $200,000 by just investing $100 a month in a single stock. That's insane. So with that said, that's not what we're focusing on today guys. So I'm gonna start today sort of at an experienced level, and then if you're somebody that's a bit more of a beginner, please take your time to watch through the whole video, and then at the end I'm gonna have a couple of really great beginner friendly tips, but I don't want to bore those that are more experienced with some of these details. So let's jump right in guys. We're gonna look for two things. We're gonna look for an upside of at least 3 times more than the potential downside, and we're gonna assume that we're gonna have a stop loss and a take profit for the same stocks that we're gonna invest in. So guys, the one thing that I want to start with here is just say the fact that I haven't really, this is a short list that I've made probably in 2 minutes right now by looking at some of the stocks that I usually follow. I haven't really looked at them individually because I wanted us to do so together. Please also ignore some of the moving averages or some of the support resistance ranges that I've drawn here. Not all of them are going to be important for today's talk. So let's start at the top of the list here guys with Citibank. So with Citibank, we definitely can see the fact that on the daily there's a very clear support resistance line over here. We can see that it happened to be a support resistance line for quite some time. It goes as back as 2020, and I actually think that if we scroll further to the left here, we can see the fact that this same drawing that I have here has been confirmed before time and time again. So with that in mind guys, what I recommend that we do here is, first off, where exactly is the next point? So let's pretend that it's gonna crash through this one as well and it's not gonna hold. Although right now, as you guys can see, it looks like it's holding. Let's have a look on the weekly here and see where the next potential line would be. So right now we're sort of trading below the usual moving averages, the 300-day moving average is above. So we're not in a fantastic spot from that point of view. Just having moving averages help us out. Well guys, really the worst case scenario that I see here for us to place a stop loss on would be basically the previous resistance line whenever it went up here and here and here and here, and as you can see, it happened quite a few times before. So with that in mind, what I would do here is again have this as a potential resistance point. So let's see how low we can go. This would represent roughly 5% of a correction. Now, as you guys can see, we're really close to the RSI being at oversold values for the weekly, which is pretty great when you want to buy, and we're definitely oversold on the daily. So with these two things in mind, we have to make sure that we have an upside of at least 3 to 4 times more than 5%. So we need to make sure that the upside here is at least 15 or 20. So let's see how big it actually is, and we're gonna do this by zooming out a bit. So when in doubt, zoom out, and we can easily spot the fact that we had a triple top here, so we're very likely to come very close to that. So what is that actually gonna be like if we do manage to go as high in the next period here and we get invested into Citibank? Obviously Citigroup, sorry, an absolute juggernaut that is very unlikely to ever go bankrupt, so your money would be good even if you're deciding to invest for the long term here. But again, we're talking about swing trades this time. And we actually, let's say we only go as far as this resistance line that I drew here, that would represent 25%. Box checked, we have 5% potential downside, 25% potential upside. And let's do the math. Let's say we have $2,000 to invest, and we're gonna decide to invest the $2,000 in 10 different stocks. So $200 per stock. We're gonna go ahead and just make sure that every single stock that we invest $200 in has the 4x or 3x potential that we were speaking about. So how often do you actually need to be right? You only need to be right roughly 40% of the time to make sure that you're gonna be successful and make sure that you have quite a hefty ROI at the end of the day. Because here's how it goes. Every single time you're gonna be wrong, you're gonna exit at, let's say, 1R, right? For the stop loss. Let's say in this case, it's 5%. But then when you take profit, you're gonna take profit at either 3 or 4 Rs. In this case, actually, for Citigroup, we're taking profit at 5 Rs. So for instance, let's say again we have invested in 10 stocks. So if from the 10 stocks we lose 7 of them, we lose 7 R. But if we win just the 3 of them, we will win 3 times, let's say 4, an average 4 R, that's 12 R. If we did just 3 Rs, so just 3 times the potential win versus the potential loss, we would have been at 9 Rs. Basically, if we invest $200 and at the end of the day we have lost 7, we have won 3. So basically, even if you're as poor as only guessing 3 of the 10 stocks that you've chosen, and you go by this simple rule of having a stop loss and making sure that your take profit is 3 to 4 times potential ROI, you're basically gonna be at 2R. And if we just take an average, let's say again, let's say the average downside would be 5%, 2 times 5, we'd be at 10%. We would make $200 by just guessing 3 of the 7. Now, obviously, it's a numbers game, and guessing or identifying 3 stocks, you're no genius. You need to do better than that, obviously, but I wanted to highlight the fact that even at such poor metrics and performance, you would still be very much in the green. So with that in mind, guys, let's have a look at the next stock here. We have Caterpillar. Let's see if it's a good choice. It looks like we're at the 300-day moving average roughly for a while now. We're a bit below, we've been higher, we've been lower, and then we're definitely not oversold on the weekly either, and then quite far away from the next moving average on the weekly. It's not a shame, guys. You don't have to make a trade every single day. You don't have to identify a stock every single day that you buy, and if somebody recommends a stock, you don't have to buy it. Analyze it, make an educated decision. Is this the best time to buy CAT now? Maybe, maybe not. It's down to everybody's risk tolerance to identify. From my point of view, we can definitely see the fact that we were supported twice over here. So if we draw a support line over here, we can identify the fact that we have a potential downside of, again, roughly 5%, let's say. And then the potential upside would be all the way up here. Let's not even go to the top. We're gonna stay here, and we're at 18.5%. So again, we're gonna make easily 4.5 times the amount of losses. That said, CAT is probably not our best choice, so we're gonna skip it this time, but it's one that you can keep an eye on. And the one thing I like doing is just looking on the 4-hour time frame, and if we start uptrending over the 180 or 200-day moving average, that usually means that we're in a good spot. As you guys can see, it went higher a couple of times before, but it couldn't really sustain it. So I would probably stay away from it right now, and then if it starts trending higher, we can get back into it and adjust the stop loss based on that. Next stock on the line here is ChargePoint. We can see an insanely strong support resistance line here, roughly at $17-18. You don't have to draw that one perfect, guys. I fell into this trap too when I was less experienced. Stop getting into the mind frame of, oh my god, where exactly is that support line? Build yourself a buffer. If we go from here, let's say we're not gonna stop exactly on the line, we're gonna go a couple of percentages lower just to make sure we have a bit of a buffer. buffer. So let's say 7%. Well guys, if we go all the way higher to where they were just 1 week ago, basically we'd be roughly at 50%, 7 times the ROI. In my book, that's a pretty great overall margin to have for something like this. It does get my vote of confidence. I would definitely do something like this. I think that ChargePoint was very well supported here before. In my opinion, it's definitely a great company. The next one here would be Pinterest. Again, it's one stock that I definitely think has a great future ahead. It's not Facebook, let's just make that clear, but I think that Pinterest has been making a lot of great moves recently, and it's also, as you guys can see in this very interesting channel, let's have a look at it on the weekly as well. The channel is also very easily visible here as well, and as you guys can see, we also have like this horizontal support resistance line over here that goes back quite a while, pretty much ever since they IPO'd. So I think again it's at a great place here. The next best place I would probably say for us to add as a stop loss would probably be roughly around here, just by looking at the chart. I'm not sure, this seems like a huge drop though, so let's see if this is something that's feasible. Well, it's a 20% drop. I definitely don't recommend that you do something, even if the ROI is 5 times that. I would not recommend doing a 20% drop. With that in mind guys, let's just take the we have already the support resistance line here. We have the sort of the downward channel that it's trading in, so we're gonna give it 5% from the downward channel. If it breaks out of the downward channel, we're out. We're not gonna look back until it gets back within it. But as you guys can see, it's very well supported here, so we're gonna give it again a 5% downside, but we have a potential upside. Let's say we only go as high as when they were part of that whole PayPal acquisition discussion, so we're gonna roughly be at 77%. This is insane. This is exactly what you guys need to look for, guys. Okay, the next company is Intel. Hopefully we're getting into the trend. You guys can see we're not going for shit stocks. I know ChargePoint is a bit more risky. We're gonna look at PLTR here too, which is again growth, pretty risky. So with that in mind, let's have a look here as well. Intel, we can see that again the moving averages aren't really helping us. If we go to the weekly though, they very much are. As we can see, Intel bounced off of this green one quite a few times. It's the 250 one, and we also have the 300 one not too far below. So if we go here by the 300 one, we're gonna be roughly at 8% of a downside. More risky than I usually enjoy, so I would probably just go here sort of halfway between the 250 and the 300-day moving average. We're roughly at 5% potential loss, but then we have a potential upside here, guys, of where we were again just a couple of weeks ago, or actually, sorry, this is the weekly, so it's been more than a couple of weeks. But here back on the daily, 1 week ago actually we were at roughly 10% more than where we're at right now, and probably what would be just the beginning of the year or mid-year, we were at 15% higher. So again, we have this 3x rule is checked, we can go for it. Not to mention the fact that you can go much higher here, and again, Intel is one of the stocks that's doing things very right. They're building 2 more fabs, and they're possibly gonna have a fantastic 2022, but just keeping it to sort of the swing trade idea, we're just gonna go as high as the 15%, and again, Intel is checking that box as well. The next stock here on the line would be Disney. So actually for Disney, we can see again a very clear support resistance line over here that's been ticked before again and again and again. If we go to the weekly, guys, we're actually right now near the 100-day moving average. The 180 isn't too far. I don't usually take the 180 into consideration on the weekly though. So yeah, with that in mind, let's see what downside we can build in here. So let's say we just have this other horizontal support resistance, again 5.5% roughly, $140, but then the potential upside where we were at just before the recent last week insanity, roughly 15%, and then if we go back at what happened just prior to that, we have 20%. So again, 4 times the loss that we are able or willing to take. The next stock, guys, and as you can see, this is pretty easy. Anybody can do this. It's definitely not rocket science. Facebook does concern me a bit with this potential downward trend that we're seeing. Hopefully it's going to be able to surpass it. If we can look at Facebook here, it had fantastic support bouncing off of the 300-day range. Honestly, Facebook has just been so bullish. I mean, check this out. It almost never goes down, and when it does, it's just for such a temporary correction anyway. I think this is a great time to buy into Facebook. On the weekly, we are really near to the 40 EMA, which I also like. So with that in mind, I would probably just say from here down to the 300 we have 6%, let's say 7%, and then if we go all the way back to previous highs, we'd be roughly at 15%. So Facebook, I mean, obviously it gets a vote of confidence, so that should tip the balance a bit, but if you're not willing to take the risk, it's not the best setup. So if we just go by the rules, identify the 10 stocks, invest the $2,000 and go by this rule, Facebook wouldn't make it. That said, again, you sometimes need to take it with a grain of salt. That being said, again, you can be super disciplined about it too. Cool guys, ATVI, Activision Blizzard, I think it's a phenomenal stock. Again, has been on the receiving end of some bad news, some lawsuits, and it's just been in this pretty bearish channel, definitely bearish right now. Hopefully it can make a comeback. It has started making higher highs. Let's hope it can support it by higher lows. But if we look at this one, again, we have this horizontal line over here that was previously acknowledged. Let's move it a bit down though, that I think this one would make a bit more sense, especially from the recent bounce. And then if we have a look, we're gonna have roughly 7% of potential downside. Now in the near term, we can easily think about getting back here in the 80s. If we do that, let's say in this previous support resistance range, we're roughly gonna be at 27%. So ATVI, another one that matches the criteria that we have and that we can easily invest in. And the very last one here, guys, is Palantir. Palantir received tons of support at $18 here. It's not the first time either, so this is a clear winner for me. I would just go basically down to 17. We are, or 17, $18, sorry. We'd have a downside of 6.6%, and then to just very recent highs where they were at just a couple of weeks ago, roughly $28, we'd be at 42%. So again, another one that makes the list here easy, guys. So you can see, guys, we don't have to overcomplicate things. We don't have to just find these very obscure stocks that nobody really heard about. Volume is very bad. They swing higher and lower like crazy. I'm not saying these haven't, but obviously the recent market has been a bit volatile as well, so that explains it. We don't have to be the ones to identify those golden gooses, guys. Let's just keep it simple, have a structure, be disciplined about it, choose the 10 stocks, invest the $2,000 or whatever your budget is. Just make sure that you have even distribution. You don't go 30% in 3 stocks, they all happen to be bad choices, and then you go bankrupt basically, or you blow out your portfolio. Make sure that you have that distribution, because honestly, you can go into a losing streak. It happens. You can go into a winning streak where 20 out of 20 picks are winning, but you're definitely gonna have periods of time where 7 out of the 7 you choose are losing, and then you need those 3 to get you back sort of to a stable ground and make sure that you still make the profits. That said, if you place 100 trades in a year, guys, and you go by these rules and remain disciplined, there's basically no way that you guys can go bankrupt or not make money, especially if you make sure to choose really great stocks. Hopefully this has been helpful, guys. I'm gonna build out a portfolio that starts at the top of next year. If you want a part of it, subscribe to the channel, guys. I'm gonna be more than happy to walk you through that. It's gonna basically follow 3 grand or 5 grand. Let's see. December has been a bit choppy. I started out roughly at 5 grand, but it drew back a bit. So let's see where we end the year. I'm gonna start next year fresh on the 1st of January, presenting the new portfolio, and we're gonna track it throughout January. And yeah, guys, let me know if you have any questions. Catch you next time. Take care.